Hi all, I am Sham and I have Kishan with me.
Hey Sham.
Welcome to Free Float. Today we are going to discuss a negative factor, and this is the biggest factor of all, which ends up, dictating how your portfolio is going to perform to a very, very large extent, and that is ownership. Who is the biggest owner of the business? Is it the promoter? Is it a set of private individuals? Is it the public? And most of all, how fucked are you if the government is the biggest owner of the business? So Kishan is going to do the honors of walking you step by step. I'm more of a blunt instrument because all of my strategies employ an explicit filter that if you see, one of the owners as the president of India, just don't buy the stock. But maybe Kishan has a more nuanced approach to this, so I'll let him take it away.
Yeah. So Sham, the thing that you mentioned that all your strategies they test out. The first filter that you have is removing government-owned companies from your list. And I first thought that was very extreme, because while I'm not the biggest fan of government-owned companies, I do see some value in, say, maybe in a stock like say Bharat Electronics or SBI, which are I mean, they might not be the best company in the world, but they're at least better run companies than than your run of the mill public sector companies. But if you look at the data, and say I made a list of say 20 companies, well-known government-owned companies in the last 20 years, and I think only three or four companies had delivered returns which were positive in the last 10 years, and out of that, only one company had a decent return of say 200% in the last 10 years, which was BPCL. And the only reason why BPCL is at 200% is because the government is getting out of the business. I mean, they're looking to sell a majority stake. So the fact that the government is considering selling, BPCL, they've not found any buyers yet, or that sale is just it's been the worst like the last 1 year. But the fact that the government is just getting out of it has driven the stock up constantly for it to be up 200% last year. But no, even the ones which government would have a natural advantage in, like the power grid or NTPC, where there's really no like competition. There is it's what big governments do very well, which is build large infrastructure projects like this. And it's generally well run. I mean, if you see Power Grid and NTPC, I mean, in terms of the return on equity and and stuff, it's like any utility company. It's not great, but it's not the worst. But those companies have underperformed or not done well. I mean, you are much. I mean, we always say that you're much better off, you know. Like buying fixed income than buying thing. In this case, it's actually true because there's no upside to holding it. And the last 10 years, I think from 2004 to 2007, 8, or even after that, PSUs were hot in India, and that's mainly that might be partly because Chinese owned state-owned companies where suddenly became like the biggest firms in the world. From I mean like the I mean and at that point, even Indian-owned companies got Indian state-owned companies got re-rated. Um, and I think everyone thought, oh my God, the government is such a fine, wealth creator of assets. So I remember, like many many years ago, like when UPA 2 came to power, and they wanted to disinvest and stuff, and this 2009, the estimated value of all the uh, public sector companies was $1 trillion. They said that if we sold everything that we own, we would get $1 trillion. I think today um, they'll be lucky to get probably 1/5 of that. You know,
Yeah.
and so I think the way we are in India is the public sector companies. It's just not that public sector companies are you know because of the lack of incentive, the profit motive, or the lack of aligned interests of shareholders. Uh, Generally in private sector companies, the objective of shareholders and the management is generally the same, right? It's to drive efficiency, to drive to stay ahead of the competition, to be innovative, to establish your market share and to control and to continue to hold it, um, and and it's generally better run, and there's no way public sector can compete with that kind of agility, but. But in India, it's just not that. It goes from you do have a lot of good run public sector companies all around the world, like Singapore Airlines or Etihad, or you have in France you have Alstom and stuff. Of Alstom got sold to GE, but before that,
Yeah, look,
you
I wouldn't necessarily call them well-run companies. Like Alstom has its own set of
have
problems.
problems. Yeah,
So here's how I see it, right? So there was a period when the elites were obsessed with communism and socialism and so on, and also capital was scarce. So if post-independent India, and I'm talking about like 1950s, right, wanted to build a national power infrastructure, right? Uh,
yeah,
I mean, like which private company would have taken up that task?
yeah, and absolutely.
It was impossible, right?
Yeah,
So maybe at that point in time, in that point in history, what Nehru did was right. Somebody had to pony up the capital and build these things, give the first jolt into the system. And back then, the like what we now call as loan guarantees and financial backstops, those concepts were probably non-existent, right? So you could argue that what was the reason for the government to set up steel mills and aluminum smelters and watch factories and so on. Um, they could have just given tax breaks and land parcels to set up these things. But we are talking about that with 2020 hindsight. So back then, if you wanted to probably give that initial push towards industrialization, maybe the state was the only answer. So I agree why they were set up. And I do believe that sometimes it's a Hobbesian choice because some industries are natural monopolies, right?
yeah,
You don't need more than one rail network. I mean, I'm not talking about actual moving of people or goods.
yeah.
But I'm talking about the actual train
Then-
tracks,
Right.
right? It's a natural monopoly. Like once a track is there between Bangalore and Hubli, why would anybody build another one, right?
Yeah,
And these tracks, the actual steel tracks that are laid, last for 50 years, 50, 60 years. So it
right.
requires absolutely no maintenance. So, similarly with the national power grid, right? So it's
Right.
a natural monopoly. So once you set it up, why would anybody set up a parallel network?
Right.
So it's a question that as an economist, you should ask yourself whether these natural monopolies rightfully belong to the public, right?
Right.
The public should own these natural monopolies, and to an extent, it makes sense because they are almost utilities. So if you allow privately owned natural monopoly to extract profits, then you end up with all sorts of social problems, right?
Yeah. Yeah.
Like if you take away power grid, maybe Reliance will say, okay, it makes no sense to supply power to Lakshadweep, for example. It
Right.
makes no
Right.
sense. So there are obviously market failures. The problem of market failures, the problems of monopoly profits in some things
The
that are
transit.
natural. Yeah.
Yeah.
So I agree that there is a place for as a last resort, right? Can't do can't allow private enterprise to monopolize. So as a last resort, yes, there should be public ownership of these assets, but I just don't see how we can tolerate most of the other public sector enterprises, right? So why the hell do we have 20, I don't know how many public sector banks
To
we
the
have?
banks. Yeah.
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 uh,
So I would say that from the time, I mean, I would say that I mean, as you said, right? At the point of independence, or at the point, during India's economic, trajectory, there might have been, a case for even government to be involved and say, like other industries, which say it's still a consumer goods. I think the government at one point made bread and stuff.
yeah.
Um Obviously now there is no need for the government to be involved. Like in Bangalore, you had Indra Canteen, and but the fact is that was very redundant because the private sector is very efficient in providing food for people at different price points. The fact that people don't you know don't at that price point, whether someone wants to eat a meal, let's say 15 to 20 rupees, or eat at 2,000 rupees, you have all range of options, and private sector is pretty good at providing that. And then you have just wastage of allocation of resources, right? And that stems down to the well-known big run companies that we have all come to associate with. Like 10 years ago, these were all called Navratnas and jewels in the crown, and I mean they're associated with that. But if you look at companies like ONGC, um, uh, from because of the endless government interference and of the government trying to every time it needs some cash, it uses these generally well-run cash-rich companies as its as its own wallet, and it determines policies and stuff. And so you're interfering in a company that was generally well run like 10, 15 years ago, well regarded, and was a large company. Today it's one third of that, and it's pretty shameful. So what happens that because you don't allow a company to function freely, um, the company is not able to reinvest, as it would have invested before. So you cannot. So at the end of the day, the government has to take the blame for it, because even if you take a company like power, the power finance companies. So now today you have a situation where the power finance companies have to. I mean, I forgot what it is, but the discoms, the state distribution companies, they're meant to. They first finance projects, but now they're meant to, the finance. I mean, the state distribution. I mean, the companies to finance them, so that the state distribution companies can pay the power suppliers, and the power suppliers pays back the power finance company. So it's like it's a very funny thing that's happening. I mean, but it's also sad that because of your endless interference and stuff, you'll also ruin one more sector of your economy. And the government is not driven by creating wealth. I mean, I think that's the biggest problem here. That the idea is not to create wealth. Okay, if you let this company run by itself, and and for it to prosper, the government can be the owner of it. Like the government can be owner, but we have to do right for all our stakeholders, for customers, and at the end of the day, we are creating wealth for the nation. And if you let it run for 20 years, this small company or this company that we have can be much bigger, much larger. And the only thing you have to do is to make sure that the best interest of the company stays the best interest of the company. That we don't look at short term, but no government is willing to I mean, they all say in theory that we'll create wealth, but no one is willing to actually allow it to let it happen. And that
So the thing
itself.
is, look, the problem is the government is well within its right to treat these companies as their piggy banks, right? The problem is ownership. It is not what they do with that ownership. So,
Yeah.
for example, there's the only reason why most of these companies get cheap financing is because the government owns most of it, right?
Right.
So if you take away the cheap financing, the company wouldn't even exist. Like, do you think BHEL, with its huge problem of unpaid bills, would exist in the
Private
without
sector?
government backstop?
No.
Like, its
So,
receivables is
so
huge, humongous, but still,
yeah.
it's not bankrupt. But look at GE, right? So the minute people got a whiff of its problems, the stock price crashed, and they're talking about reorging the whole thing, spinning off this, that. It's like panic stations. But look at BHEL. It's like a sclerotic nonsense, but it still continues as if everything is fine. And so
but the stock
if
of but the
BHEL
stock of
ever turns a profit, and the money comes in, the government is now well within its right to raid it, because without it, BHEL wouldn't even survive
Right.
2 days.
So I think like, I mean, the thing with BHL is that the stock has done 90% from from 2010 in the last 10 years. So it's the stock does reflect what the market thinks of BHL. The point that I'm trying to make is more broader, that uh, like every promoter has the right to use any company as a piggy bank. Like, even a company owned by institutions like mutual funds and insurance companies can tell a company, do not reinvest, just pay as dividends for this year, because we have to deliver returns to our shareholders. We had a bad year in the market, so we want to make it up by showing positive return, by outperforming the market. Like every owner can do that, but most owners would not do that, because it would, at the end of the day, hurt their investment in the long run, right? And at the end of the day, the government has to take a call that like, even like Air India, right? I mean, they've been trying to sell it for many years, and there's no bidders. I mean, there's absolutely no one who's
Yeah,
interested in
but
Air India.
see, that
Yeah,
Air
and
India is a disaster, because there's a book written on why it is a disaster and how it went from being a Maharaja of the skies to pauper of the street. So it has a lot to do with how it was merged with Indian Airlines, and the subsequent hobbling of its instincts and so on and so forth. But anyway, excuses aside, there's another problem in that the government itself, when time comes to actually pump money into these things, they hesitate, right? So I don't know if you remember Chidambaram's brain of an idea of oil bonds. Do you remember that
yeah,
era? Yeah.
yeah,
So oil prices were going sky high, and the government had the subsidy which kept, it was basically buy high and sell low, right?
yeah,
So, who makes up the difference? Well, the oil distribution companies had to make up the difference, and the government had to reimburse them for that subsidy, and the subsidy bill just shot through the roof because of oil at $100 or something like that. And so instead of the government borrowing in its own name and making good, they issued oil bonds to these companies.
yeah,
So these oil bonds were not worth the paper it was written on, right? So and what are you supposed to do for liquidity? All you have is this oil bond, which matures in 5-10 years, and so most of these guys would just take those oil bonds and just dump it into the market, and they would trade at at a huge discount to where the the guilds were trading. So some FIIs made a killing just buying and holding these, these oil bonds at a deep discount. So finally, who benefited from this? Right? It was basically foreign portfolio investors who benefited from the government's reluctance to make any meaningful change in its subsidy regime. So it's only now that I think a few years ago was when the last oil bond matured, and it's finally in the dust heap of history. But the thing is, next time there is a problem like this would be a go-to solution for the government. They're not going to look at the negatives of this. They're going to say, hey, the oil bond is a great idea. Let's try it again. Um, so, uh, so,
Yeah.
so there's a
And
lot of
and the thing
points
is,
in ownership.
that's the thing, right? The government is also not consistent, with its policy, right? And I think that's another problem, that the government goes back and forth, on its commitment and its on its word and stuff. So at the end of the day, market, dislikes all of that. The market, rewards companies where there's, visibility of revenue, but also like visibility of what the management or the promoter will do, right? Here, there's no clear vision. There's no clear, backing your statement with real action, and all of that the market, knows and feels. And my thing has always been, you can have good, well-run public sector companies, and as long as you don't have the government interfering in those, in the day-to-day operations of it, you know uh, things will work out. Things will be. It won't be. It won't create the next Amazon or Google. But that's not the objective of private sector companies. The private sector companies are meant to, are meant to provide a much needed utility or service, which maybe, due to historic reasons, they had to be provided by the public sector, because no private sector would have done it. And now you just continue to hold it because because you have been, because you created the firm, and you hold it right now. But you still have to act in the best interest of the company, and I think that is a big factor for why public sector companies underperforming. It's also, the financial performance, which again stems from the same, things, but you have to blame the promoter here entirely. The promoter is to be blamed entirely on, and it doesn't mean that, it's BJP or Congress, or that's other. It's just that the attitude of the promoter is such that, no matter who's in charge, the public sector companies, just have the same fate,
Yeah.
and
Yeah, so I don't know. Some value investors, like the HDFC guy Prashant Jain, and lately, some PMS managers have also pointed out that you know these uh, these public sector companies are grossly undervalued, and maybe now is the time to buy it. But the problem is that, like we pointed out in our previous posts on value investing, magic formula, and systematic value. It's very difficult to tell the difference between value picks and value traps. Sometimes you're just going to be wrong. These
yeah,
companies could be fairly valued where they are right now, and and there are no guarantees that they will not fall further. And at the same time, you have a promoter who is actively working against your interests.
yeah,
So that's like a huge problem there as well. So I would stick with my approach. Ownership data is available as XML files on NSE and BSE websites. Just download it. Make sure that you're parsing it for, President of India or Government of India or whatever. So and make sure that they don't turn up there, because it's like a terrible, terrible thing. If you end up owning a stock where the biggest investor there is working against you full time. So with that, I think we should wrap up this talk on public sector investing. So our basic message is avoid them. So with that, we'll catch you again next
Next week.
week. Thank you. Bye.
Thank you. Bye.